During the break, we got some numbers coming in from Emami, and they look absolutely in line with what the street was working with. EBITDA coming in at 264 crores, our poll was 264 crores. Revenue coming in at 812 crores, our poll was 812 crores, absolutely in line as far as the margins are concerned as well. Net loss, or rather net profit, has come in at 144.5 crores. This compares with the poll of 149 crores. There was a one-time loss of 3.5 crores. So you add that back and it would be absolutely bang in line with what the street was working with. Now, the only number that remains to be known is the volume growth, or rather volume decline in Emami's case. We were working with a number of -3%. So let's see how that pans out. The stock absolutely flat as well because the numbers are in line. But the big trigger, positive trigger for Emami took place yesterday, where the company decided to sell off their cement business for about 5,500 crores. So that takes care of the promoters' debt, and at the same time, the pledge for the promoters' stake on Emami reduces from 70% to around 20%. That's what a brokerage note said this morning. So that would be a big positive. That was an overhang on the stock, as a result of which it had been an underperformer, trading at just around 24 times as against the sector, which was upwards of 45, 46 times. But the numbers look absolutely in line, Ekta.
Okay, and you can see that in the stock reaction as well. It's absolutely flat, just about a little bit of a marginal movement coming in for Emami. But let's move on then on to some news coming in on the PNC Bank case. Supreme Court has stayed the Bombay High Court order allowing the sale of HDIL assets to recover deposited dues. Ashmit joins in with more details. Ashmit.
Well, this had been a big concern as far as the RBI is concerned. They had moved the apex court. Their concern, the bone of contention, was an order that had been passed by the Bombay High Court on the back of a petition filed by depositors. The depositors had sought some form of protection, some form of recovery of funds, and towards that extent, the Bombay High Court had in fact directed for sale of HDIL assets to help recover the dues of the depositors in question. However, the key distinction was that when this hearing took place, when this order was passed, the RBI was not a party to that matter, and that appears to have irked the RBI. That appears to have been a concern for the RBI. They moved the apex court and they voiced their concern that these orders regarding the bank in question, the PNC Bank, were passed without consulting the sectoral regulator, without taking their views, without even being informed of the fact that the RBI is in the process of helping to revive the bank, and that HDIL assets are a key part of that revival plan, and any tinkering with that, any sale with that, will hamper the RBI's plan for reviving the bank, which in the long term the RBI argued would in fact be in the benefit of depositors. Now, on the back of these concerns, what we understand is that the CJI-led bench of the apex court has agreed to hear the matter. One. Two, it has issued a notice, but perhaps most importantly, the Bombay High Court order has been stayed. What that effectively means is that the sale of HDIL assets has now been stayed by the apex court. It cannot go ahead, it shall not go ahead, and that only after further consideration and only after all the parties are heard will further directions being given. So as of this stage, the indication that had been given by the Bombay High Court that HDIL assets can be sold, that has clearly been stayed. A status quo has been allowed. The apex court will take up this matter in the weeks to come.
All right, Ashmi, thanks a lot for that. But let's move on to some stocks reacting to their numbers. We just spoke about Bata, which has recovered from the lows of the day. The company has reported a tepid third quarter. Revenue and profits were mildly below expectations. But the long-term structural story as far as Bata is concerned, market share from unorganized, premiumization of their portfolio, as well as, gaining ground from post-GST and continuing growth via growing in different parts of the country is intact, and which is why the street likes these numbers. Here's a word coming in from the management on the fine print of their results.
This quarter, we did see a slight slowdown in the growth from what we've been witnessing over the last 6 to 8 quarters. Retail came in at 4% growth, whereas our wholesale distribution division really came in with the great growth of now a third quarter of 20+ growth for us. For us, the contribution of the two sections, if you draw the line at 1,000 rupees, works at about 50-50. And this quarter, as well as what has been happening over the last few, the more premium products have been driving the growth for us.
Okay, so that is Bata talking about their numbers, but we do have the Voltas numbers which are out on your screen. So the profit has come below expectations. So the profit is coming at around 87 odd crores, and we were working with a figure of around 115 odd crores. The total income as per the press release is at around 1547 odd crores. Okay, 1492 crores versus our poll of around 1632 odd crores. So that too is below expectations. So it's a miss both on the revenue front as well as the profitability front, and maybe what we were expecting in terms of margins, that should come up for you. Mangalam, if you just have that figure with you in terms of what the expectation was in terms of margins. But as of now, the revenue and the profit have definitely missed estimates by quite a margin as well, you'd have to say.
Absolutely, just calculating the EBITDA, Ekta, but from the looks of it, if the revenue and the net profit have missed estimates, the assumption would be that maybe the margins are also below expectations, and the EBITDA has come in at close to 98 odd crores, and that is much below our expectations. We were working with a number of 134 odd crores, so there has been a miss on the margins as well. The revenue was below expectations, margins were more, worse than what the street was expecting, and at the same time, the net profit has taken a dip as well.
Yes, I think it's just a top-down miss which has come through for Voltas this time round. So let's see, as of now, the stock is just about negotiating with it. EBITDA, as like you mentioned, is coming at around 97.5 crores. They were expecting double-digit growth in the cooling product segment on account of a lower base. So let's see whether that translates or not. And in the EMP segment also expect recovery and execution to take place. The margins have been a clear disappointment, 6.5% versus 8.2%. So it's, even though the revenue was lower than estimates, they haven't been able to maintain their margins either. So it's been a real top-down miss for Voltas from what we can see. 1492 crores in terms of revenue, margins at 6.5%. In fact, I think we have Anisha with us to provide more perspective on these numbers. Anisha, it looks quite disappointing.
Well, actually, Ekta, if you look at the headline numbers, yes, it looks disappointing, but the internals are not too bad at all. That is because it is just the miss coming in from the electromechanical segment of the company, and that is something that continues to be lumpy. So if you look at the segment performance, the revenue for electromechanical projects has dipped to 808 crores versus 875 crores, and this is the segment which is actually causing the margin pressure as well. Because if you look at the segment EBIT, it has come down all the way to 37 crores versus 70 crores that they reported last year. If you look at the cooling product segment, and that is something that we pay attention to, that because that is the steady business for the company, the revenue there has actually increased by 14% to 601 crores versus 526 crores. Remember, we were working with a double-digit growth to come by in the UCP segment, and the company has delivered on that. Even if you look at the market share in the AC business has been reported at 24.3%, and if my memory serves me right, it was close to 24% last quarter as well. So there has been no loss as far as market share is concerned. As far as the EBIT of this segment is concerned, it is higher by 36% to come in at 61 crores versus 45 crores. That tells me that the margins in the cooling product segment has been around 10.5%, which is much better sequentially as well as on year-on-year basis. Even if you look at valuations for this particular company, it has come down to around 29-30 times forward earnings versus the peak of around 35 times that we have seen. And that is where the stock is not reacting much, because we have been used to seeing disappointing numbers from Voltas, but this quarter it hasn't disappointed. Yes, it is the EMP segment which has come as a big miss, but the steady business, which is the unitary cooling product, has performed all right, and that is why you're seeing that the stock is not reacting much. In fact, it is a tad bit higher than the lows that we have seen.
All right, Anisha, thanks a lot for that. Unitary cooling products business EBIT has increased by around 36%, and the revenue increased by almost 14%, and that is the key stable segment for them, which is why the stock has recovered from the lows as well. We'll take a short break, come back, we get you more on the markets when we return.